Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance and tries to give you some helpful tips along the way. What we're going to look at in today's video is the Vanguard Lifestrategy 100% equity, as I feel like this is the best place for a beginner to start investing. As usual, we'll then take a look at my own portfolio to see how it's been doing over the last few days. So with that said, let's hop onto the Vanguard platform and have a look at the Vanguard Lifestrategy 100.
You can check out the selection of Vanguard Lifestrategy funds before you've opened an account with Vanguard. You can do this by going onto the Vanguard website and clicking What We Offer and selecting the Lifestrategy funds from the drop-down menu. Vanguard currently offers 5 different life strategies, from the Lifestrategy 20%, which offers 20% equity and 80% bonds, right down to the Lifestrategy 100%, which offers 100% equity. Because of these different allocations, each fund brings a varying level of risk. Vanguard represents this with their risk ratio from 1 to 7, as you can see down the right hand side here. The Lifestrategy 20% equity has the lowest level of risk because it's got the highest proportion of bonds, whereas the Lifestrategy 100% has the highest level of risk as it is made up of 100% equities. If you're not adverse to risk and you want to see potential for higher levels of growth, you should go for a Lifestrategy 100% equity. Whereas if you are not prepared to take the same level of risk, an allocation with a higher bond percentage would probably suit you better. One of the key benefits of all of these different funds is the low-level ongoing charge fee, which you'll see as 0.22%. For example, if you have £1,000 invested in any of these funds, you would pay just £2.20 per year. If that's ramped up to £10,000, you would pay £22 per year. And for an investment of £25,000, you would pay £55 per year. In addition to the ongoing charge fee of the fund, you will also have to pay a low account fee of 0.15% per year on all the investments within your account. This is really competitive and it beats most different investment platforms out there. What that means is if you invest in the Lifestrategy fund, you'll pay 0.37% in fees per year. 0.22% of that coming from the ongoing charge fee for the fund, and 0.15% of that coming from the low account fee. While Vanguard provide an example below, showing a lump sum investment of £20,000 into the Lifestrategy fund, I think it's best to look at something a bit more realistic. So if you invested £1,000 into a Lifestrategy fund for a year, you would pay just £3.70 in fees for the whole year. This would obviously then scale up to £37 a year for an investment of £10,000 and £92.50 a year for an investment size of £25,000. Now, compared to most other platforms and products, that's very competitive and not many places can beat that. Another reason the Lifestrategy funds are an excellent place to start is because of their massive diversification across many indices. Each Lifestrategy fund is made up of a collection of different Vanguard ETFs and funds. This provides not only sector diversification, but also geographical diversification, which can help to both protect your money and give good levels of growth. The Lifestrategy fund which is best suited to you depends on how much risk you want to take and how long it will be until you need to withdraw from your investment. If you are young and you are just starting to invest and you are investing for the long term, a strategy fund with high levels of equity will probably be better suited to you. Whereas if you're going to need the money within the next 10 years, a Lifestrategy fund with lower levels of equity and higher levels of bonds will probably suit you better. And this is because the reduced volatility you'll get from the bond allocation. As I am a younger investor with a long investment horizon, I decided to go for the Lifestrategy 100% equity. By tapping on the detailed toggle, you can see how each fund performs over time. What you will notice here is that the funds reciprocate one another. Is when the Lifestrategy 100% equity has performed the best, the Lifestrategy 20% equity has usually performed the worst. The reason for this is due to the asset allocation and the mixture of bonds and equities. By clicking on the Lifestrategy 100, you can get more detail about the fund. You can get an overview, price and performance, portfolio data, information about the distributions and any dividends paid, and information about the costs and minimums. We'll start off with the overview. From the overview, you can see the current price of 1 unit of the fund, the asset allocation, the ongoing charge fee which we've already spoken about, and the risk rating out of 7. By scrolling down, you can see information about the past performance and the performance of the fund over time, You can also see information on how a lump sum investment would have tracked over time. Here, the graph shows if you'd invested for £10,000 in April 2015, that same investment would now be worth £14,000. This equates to approximately a 40% return across the 5 years. By clicking on the price and performance, you can get details on how the price has changed over time, as well as some price analysis graphs which you can change the date range from the current date range to 18 months. You can see the Lifestrategy fund has continually increased in value over the last 18 months until the market fall of March 2020. Because the Lifestrategy is 100% equity, the current economic climate hit the fund particularly hard, as you can see from this graph. By clicking Portfolio Data, you get an idea of what funds make up the Lifestrategy 100% equity. You also get a percentage based on the allocation of each fund. From looking at this, you really get an understanding of the levels of diversification which this fund offers. This level of diversification really helps protect your investment from any volatility within the particular market. By investing in the Lifestrategy 100, you'll be investing in essentially 9,261 different companies. Now, some of these companies might be doubled up if they fall into one or more of these different funds. However, the ability to invest in 9,261 companies, essentially, by investing in one fund is unbeatable. By tapping on distributions, we can see a breakdown of any dividends which will be paid when we invest in this fund. Now, the Lifestrategy 100 offers two options when selecting the fund. You can have an accumulation fund, or by tapping on available in other share classes, you can see that an income share is also available. This is something that I'll look into in a later video. However, to break it down really quickly, an accumulation fund means that your dividend is automatically reinvested back into the fund. If you decided to go for an income Lifestrategy 100 fund, you would get a dividend paid to you once a year. Here we are inside my own Vanguard portfolio, and you can see my investment into the Lifestrategy 100. I've invested £1,085 into the fund, and the current value of my investment is £1,040.76, which means a loss of £44.24. By clicking on the Lifestrategy, you can see the value of the fund over time. The green dots show where I have invested in the fund, and the red dots show where I have withdrawn from the fund. As you can see, I've steadily invested in this fund over time as part of my pound cost averaging strategy. I've continued to do that through the drop in the markets as we've seen in March 2020, and now I'm continually investing again throughout the other side. You can click on the dots to see the value of one unit at the time of either purchase or sale, and by scrolling down further you can see yet more information. You can see the amount of units you bought with each purchase, you can see the value or the amount of money that you invested, and you can see the settlement price per unit of the fund. I'm now going to make a small investment into the Lifestrategy 100 to show you how easy it is to do and the process. It's as simple as tapping Invest in the bottom right hand corner. You'll then be greeted with two different options, Next Trading Point or Live Price, and this is for ETFs only. I always use the Next Trading Point to avoid any additional fees. You'll then be shown a selection of Vanguard products which you can invest in. The Lifestrategy is obviously a blended fund, so you open the blended funds and find the investment that you want to make. In my case, it's the Vanguard Lifestrategy 100% accumulation, and I want to invest £50. If you look at the minimums page on the Lifestrategy, you will see that it says a minimum monthly investment of £100 or a minimum lump sum investment of £500. However, once you've actually signed up to the product, you can invest as little or as much as you want. I've invested from as small as £20 into this fund. You then just need to put a payment method in, and then you're done. The investment is now pending. And you can see that by the last transaction, where you can see I have one pending buy order. Now let's have a quick look at my portfolio. After a fairly volatile week in the stock market, you can see my rate of return has fallen, and I've now laid a loss of £74.53. If we look at my month to date, you can see that so far I've invested £100 this month and made a market gain of £13.12. I'm currently fairly happy with the overall performance of my portfolio, with only 2 out of the 5 funds I invest in yielding a negative return. In the current economic climate, that's definitely a positive to hold on to. My investment in the Lifestrategy 100 is currently yielding a negative return. However, if I decided to invest in a 40% or a 60% equity fund, I may be seeing a positive return of investment at this point. However, because I decided to invest in the 100% equity fund, the market downturn has hit it particularly hard. The fund yielding the worst rate of return in my portfolio is the FTSE 100 at negative 25% and a £70 loss. One of the positives here, however, is that the FTSE 100 ETF gives a very nice dividend, and this year so far I've made £12.72 in dividends from the fund. While this doesn't counteract the loss I've made, by reinvesting these dividends and continually pound cost averaging throughout this market dip, I hope that I will come out the other side in the future with a positive return on investment for this fund. The last week's been quite volatile in the stock market, so if we have a look at the graph development in the value of my portfolio over the last 5 days, you'll be able to see that I started off the week with £2,700 invested, which then increased slightly on the Tuesday to £2,718, and then another £5 increase to £2,723. The market took a bit of a downturn on Thursday and Friday and reduced to £2,685 and £2,656 over the last few days in the week. Following my investment of £50, my current ISA value is £2,735, and that equates to a rate of return of negative 5.25%.
So hopefully that clears up some of the finer points of the Vanguard Lifestrategy 100. As I said earlier, it's an excellent way to start investing with little to no experience. It really is the sort of thing you can just invest into every month and slowly watch that grow over time. Maybe it's the right investment that will get you started. If you found this video useful, please don't forget to like, comment and subscribe, and I'll catch you in the next video.